It's time for your Friday coffee with your mortgage man, Eric. Today, we're going to talk about some good stuff here, man. Credit restoration, credit scores, credit reading. The reason I'm bringing this up, in the last couple of weeks, I've just seen a large misunderstanding. Look, there's always been this issue or this misunderstanding out there. In the last couple of weeks, the number of people I've ran into that have tried to clean up their credit themselves is very interesting. So let's break it down and start credit score. Everybody's kind of focused on, well, I got to have this credit score. I got to get to that credit score. I got to get to a 660 credit score to get down payment assistance, right? And look, the credit score is not necessarily the end all. And what I mean by that is that just because you have a credit score of such and such does not mean that you will be approved for a home loan. See, a total huge misunderstanding there, right? How and why is that the case? Because let's say you had a 760 and in the last 12 months something happened, you lost your job, you got divorced, whatever, and now your credit score is a 660. That means you probably had some 30-day lates, right, on a car loan, a couple credit cards, something like that. Well, those recent late payments, 30-day late payments, could affect your approval. And we won't know until we work on it, right, and give you what we call the desktop underwriting. The algorithms in the system are going to tell us if you're approved or not. So don't necessarily assume just because you have a certain credit score that you're automatically going to be approved for that loan or that loan program. Huge misunderstanding there. Additionally, people with credit restoration, right? Here's the big thing. And I get asked this question all the time. Eric, do you help your clients with credit restoration or credit repair? We don't like to use the word repair just because the Federal Trade Commission, FTC, doesn't like that word. So we use restoration. And when we send somebody in the credit restoration or give them advice in sending them the credit restoration, you know, the huge misnomer is that they're just going to clean it up. You know, I'm going to pay this money and they're going to remove things from my credit report. That's not how it works. And I understand that you may see things on the internet about that. You may hear stories about that. Oh, you know, they're going to remove it. That's not how it works. When they dispute the erroneous or derogatory items on your credit, if the creditor validates your debt, you're back to square one. So what I'm getting at is if you truly own or owe that debt, that medical collection, those collections, they're going to be more than likely validated. Now, if they're 4, 5, 6, 7 years old, there's a good chance they may not validate. You know, but it's a gamble. It's a roll the dice. They may come back and they may not validate it, and we might be able to wipe it off the credit report. Maybe we won't. Now, all of that is for naught. If you don't have something that's going to drive the scores up. And here's a huge, this is the number one homework assignment I give people before I even send them the credit restoration. Because it's pointless to send them the credit restoration unless you have some sort of good debt or good credit on your credit report. And what you need is a minimum of 3 credit cards, revolving debt. So if you have a car loan and you've paid a car loan on time, that's great, but it doesn't give you the score bump or add that you need as like a credit card does. I don't make these rules. I just know the rules. I just know how the game works. And a credit card is the most and easiest manipulating factor to somebody's credit score. Example, perfect example. You have a credit card that's $1,000 limit and you have it maxed at $1,000 balance. If you were to go out and pay off down to a zero balance, your credit scores are going to come up somewhere between 25 to 45 points just on that credit card payoff alone. That is, I mean, to improve your credit in one day, I mean, you see where I'm going? That's the most easiest, most manipulating factor you can do to somebody's credit scores. Of course, that takes money. You can't get blood from a rock, as they say. But where I'm going with that is, if you don't have 3 revolving trade lines, credit cards, getting into credit restoration is not the first thing you should be focusing on. The first thing you should focus on is getting yourself the 3 credit cards. And it has to be number one priority, and here's why. Is that when you get a new credit card, it has to be reported to the credit bureaus for 6 months before it will give you any score value. That's a Federal Trade Commission rule. Why did that rule get put into place? It's because it's part of the housing meltdown we had back in, when it started the meltdown in 07, 08, and 09, right, the recession. Is because back in the subprime days that somebody would go and open up a credit card today, and next month their scores are 60 points higher because they opened 2, right, or 3 credit cards today. And there's no history there. But the way the algorithms used to read is that your scores would get bumped up quite a bit quickly. So it was artificially inflated. And people got into homes under the wrong pretense. So they changed that. The Federal Trade Commission came out and said, look, the algorithms now are, you're not going to get any score value from those credit cards until they've been seasoned for 6 months. So you have to understand the game with that. So it's like, I talked to a consumer, get these credit cards set up. Well, I don't get, I'm not going to get any, good credit cards. No, you're not. You're going to get the ones with $89 annual fee or an $89 sign-up fee or both, and it is what it is. You got to start from ground zero. Now, you can also start with what they call a secured credit card. Wells Fargo has them, Capital One has them, First Premier Bank has them, Fifth Third Bank has them, where you give them $300, they give you a card back, they report to the bureaus, and it gives you a score. 6 months later, you're going to get some value from that new credit card. Now, here's the thing. If you have it maxed out, if you give them $300, charge $300 on the secured credit card, it's going to sink your scores. It's a game. You have to play the game. So what I always tell people is when you get the card, shred it. Put it right in the shredder. We're not using it. So you got to keep that. That has to be the number one homework assignment. We got to get the 6-month clock rolling, right? The 6 months has to start rolling. And then once you've got the credit cards, now we can put you into credit restoration. And credit restoration, credit repair is a whole different topic, right? Who do I go to? And there's law firms out there, and they'll charge you an arm and a leg, $150, $199 a month, that kind of thing. There are cheaper ones out there who I refer my customers to at like $69 a month. And depending on how bad your credit is, you may only need 2 or 3 months, or you may need 10 months. It depends, right? I mean, if you've got 38 collections, or do you got 8 collections? So it's going to differentiate. But if you're not willing to go into credit restoration and you're going to fix it yourself, in 19 years of being in this industry, I have seen one person successfully repair their credit themselves. Why? Because it is a tedious process, back and forth with each of the 3 bureaus. It's not fun. It's a daunting task, and that's why you should hire someone to do it for you, a professional that is all that they do all day, every day. So your credit got there in a bad place for whatever reason. Hardships, divorces, death, illness, lack of income, laid off, right? Bad habits, if we're honest here. bad habits, learning, maturing in life. Those things happen. So the first thing we got to do is get you credit cards, and then we'll put you in credit restoration. And usually looking at a 6 to 12 month process. Now here's the thing. Less than 10% of people that I talk to that are in that predicament. I want the down payment assistance. I know I need to have 660, and I pull the credit and we're a 602, and I give them a path. I'll spend 20 minutes or 30 minutes, whatever it takes with them, and say, look, if we do this, I will put you in a home in 9 months, 12 months. Less than 10% of those people will actually go through credit restoration, will actually do the homework. Now think about it. It's not that difficult to sign up for 3 cards. That'll take you approximately 10 minutes for each card. And you may already have 1 or 2, right? So you may only need 1 or 2. But then signing up for credit restoration is merely a phone call, and then they do the work, and you're paying them monthly. And we will get you where we need to get you as long as you don't go backwards on other things, right? I mean, I've had people already that have been in credit restoration, and we're ready, the magical day is here, we're going to pull your credit. And we pull the credit and we find out they just went 30 days late on a $22 monthly minimum credit card bill. And unbelievable. We're starting over. You have a 30-day, that 30-day late just tanked your scores 50 points. So all the work we've done for the previous year, you couldn't pay a $22 minimum credit card minimum bill, and you want us to loan you $200,000 to $300,000 for a home. So you got to keep that into perspective. So there's more that meets the eye in credit scores and credit restoration. I was blessed when I got into this business and spent a good time of my earlier career with a lady that owned a credit restoration service. And I learned a lot from her. So I believe I'm way ahead of the curve when it comes to other loan officers and other lenders on looking at a credit report, reviewing the credit report, because it's more than just the scores. Most of your loan officers will pull, well, Johnny, you got a 646 credit score, and that's it. That's all you read is a score. They don't read the credit report to see the ins, the outs, the pros, the cons, and what we need to do, and estimate how long will it take to get there. They just don't, most don't do that, unfortunately. Anyhow, if you have any questions regarding this topic, I'm here to answer them for you. Most home buyers, prospects for buying a home, it's going to take them 6 to 12 to 15 months before they actually pull the trigger. So I get that. I'm here for your help, and this is Coffee Friday with your Mortgage Man Eric.